Hello, hello. It is Stephanie Evelo here with the Evelo team at Keller Realty, and I've got my special guest where we do these monthly updates, monthly market updates. I've got Bob Werner, one of our senior VPs with our team, and we're going to share some stats today so that you can be most informed about what is going on in the real estate market today. That's the number one question we all get asked. Those of us that are realtors, we get asked every single day, what is going on in the market? So Bob, kick us off. So what's happening out there in the local market right now in June?
Absolutely.
What have we seen?
Probably seeing information on the news every night, online every night. It's definitely seems to be one of the most talked about topics. So, keep in mind this information that we present today does trail by a few weeks. So this is for information ending June 30th, 2022, but it's kind of similar to the format that we've done since we started these back in early 2000. First one up here is the median sales price. And what you'll see here though is still big changes, right? The median sales price ending June was $295. That's the highest it's ever been in our market. That's up 18% year over year and still up 3.5% month over month. So prices still increasing.
I mean, 18% is absolutely phenomenal, right?
Yeah,
crazy numbers. I know back when I first started, I mean, we were lucky to get 3% or not even 5%. I mean, we'd be ecstatic if it was 5%.
Right.
So,
yeah, so still big changes. We'll see.
Yeah.
The anticipation is that prices are still going to increase. We don't expect 18% year over year increases,
right.
But nothing that would indicate that would be headed down anytime soon. Next up, we've kind of been taking a look at that average days or median days on market. We've kind of flatlined there. So same 5 that it was year over year and same 5 that it was last month. I think we'll maybe start to see the biggest change to this slide. You can start to see these little peaks are going to start going up a little bit, it looks like. And then next up is that month supply of inventory. This is probably the biggest one that we can see a change to so far. So at this time last year, we had a 0.5 month supply of inventory. We've jumped up to 0.9, which doesn't sound like much, but that's a 67% increase. And even last month, we were at 0.7. So we've jumped up 35% there. And you can see that our line has started to go up there. So again, a balanced market being about a 4 to 6 month supply of inventory. So we're still far away from a balanced market, but getting a little bit closer. The last time we were above a month was around, it looks like we hit it in like October 2020, but the last time we were consistently above a month supply of inventory was way back in March of 2020. So it's been a couple years. And then that last one we like to take a look at from this perspective is that list to sales price ratio. So on average, homes are selling for just a tick under 102% of list price. So that's right in line with where we were for June 2021 and down a little bit from where we were in May of 2022.
Yeah. Wow. And so what does that look like if it's 0.9 months supply of inventory? What does that really look like?
So the way that we've been trying to take a look at this each month is we've just kind of taken 5 of our northern suburb areas. Once we saw the active inventory for these drop under 500, we started tracking it. And just before we started, I shared with Stephanie, this is the first time since we started tracking these 5 being under 500 that we've now actually gone back above 500. As of when I pulled the information today, we have 589 active listings across these 5 suburbs. So that's kind of, we saw it increase some last month, but it hadn't crossed that 500 number. So we'll keep tracking this to see how it moves forward. Because that median sales price has increased so much, there's only 22 active listings under 250, keeping in mind that our median sales price now is 295. So that trend is probably going to remain pretty low, but we're starting to see that inventory take an ever so slight creep up month after month.
Yeah, and what's going on in the mortgage side of things on the interest rates and such?
Yeah, so we're obviously not the 100% pros on that, but we got to keep track of that as well. And the best way to describe it is kind of like a roller coaster, right? Like, let's look at this blue line here, what we've been this year. up, down, way up, down. So we actually are about a quarter of a point lower for the week ending 7/14 than what we were for that same week in June, at 5.51% average for that 30-year fixed rate mortgage. So, but you can see we kind of came down a little bit beneath that the last couple of weeks. We've creeped up a little bit. So it just seems, at least in the short term, we're probably going to keep having these little ups, downs, up, downs. I don't know that we'll cross 6. I guess we'll kind of see how things transpire over the next 30 to 45 days and some of those external factors that could influence that. But right now it seems like we're positioning in that 5.25 to 5.75 for at least the short term.
Wow. Yeah. And it's all relative, right? I know I always reference back, but my first house, was at 9.5% fixed rate, and that was back in 1995. So, yeah. So, any final thoughts, Bob? Any final thoughts on all of this?
Yeah. So we always like to try to end with some information. So, kind of alluded to this already, right? What's happening right now? The housing market is certainly kind of beginning to rebalance a bit. We're not going to go from a 0.9 month supply of inventory to that full-on balanced market of a 4 to 6 month supply of inventory overnight. Right. But even the difference between a 0.5 month supply and a 1 month supply or a 1.5 month supply, that's pretty significant overall in terms of what we've been operating on. So what does that kind of mean for buyers and sellers? So the demand from buyers certainly remains high, but it's decreasing as some prospective buyers exit the market, right? It either could be frustration with not having success. It could be the increase in interest rates has priced them out along with the price increases. So we're seeing that buyer demand, some of those prospective buyers getting out of the market, right? Those multiple offer situations that drive up the purchase price, we're seeing those lessen a little bit. Right. And all these things are very situational dependent, very hyper local dependent to a specific area, specific price points. But in broad strokes, we're seeing those lessen a little bit. So you might see some winning offers come in closer to list price now. We've had a couple on the team that have even come in a little bit under list price recently.
Right.
So might see some of that happening again.
And I think that's so important to note for buyers, right? Because those buyers that have exited and just felt like, they're absolutely going to have to pay list or way over list price. And you've heard all the crazy stories of how much over list price, but there are still homes out there that are selling at list or under. Now, not tons, but it's definitely happening more often than definitely far before. So
right. And there's some strategies we could talk about too. If you've been a frustrated buyer, you haven't experienced success, we can certainly give some guidance as to maybe an approach that could work better than what it's worked the last couple of years. Next up, I just said, we're starting to see homes spend more days on the market, right? We got in this, when I first started in the business, our average days on market was a little bit above 100. And as we showed earlier, right now it's 5, right? So that anything that made it beyond that first weekend, it was like, what in the world, right? But now that is definitely becoming more common. I think as we move forward, we're not going to go from 5 to 100 overnight, but I think it's pretty safe to say we'll go from 5 to 10 to 15 to 20 to 30. We'll start to see that movement over the next 6 to 12 months, and they'll stay around a little bit longer. With that less competition, right, from a seller perspective, you might not get as attractive of an offer, right? Buyers might slow down on waiving inspections or offering appraisal gap coverage. Still going to maximize the sales price of your home just because of how much the sales price has increased over the last few years. Maybe just not as crazy as what some situations have been. And then last, those buyers that are in the market right now, they're serious, right? They're serious about getting their next home. They're well qualified and they're ready to go.
Yeah, so I see some positive on the horizon for buyers, right? Because I feel like for a long while, buyers have just felt depleted or defeated, right? So with the market conditions as they've been, but so that's some good news for buyers for sure.
Absolutely.
Well, thank you so much, Bob, for sharing, and we appreciate all that you do each and every month for us to get us up to speed on what's happened and what we should anticipate, and kind of looking forward to what to expect. So, thank you so much to each one of you out there joining us. If you have any real estate need that we can help with, let's connect. You can connect to us at info@eveloteam.com or 317-863-9011. And we would be happy to answer any and all questions that you might have about any of your real estate needs. So thanks so much for joining us today. And always make each moment count. Bye-bye.
Bye-bye.